Uganda last week presented an over 52 trillion budget with focus on monetization of the economy. Of course, we all appreciate the fact that there is a bulk of Uganda's population that lives outside the money economy. Welcome to the show. It's Money and Markets, and I'm Charles Boji, your host. The discussion about monetization of the economy cannot be complete without talking about the role of finance sector players. Talk about banks, insurance companies, and the capital markets in actually being enablers to those that are willing to actually play within the money economy. Of course, here we look at a special ingredient, and that is the Credit Reference Bureau. So today we again pick the mind of the players to find out why it's critical for you to have a clean record within the Credit Reference Bureau system.
What we do as a bureau is we collect credit data from authorized credit providers who are currently Bank of Uganda regulated financial institutions, and at the moment they are 33. So a Credit Reference Bureau is an important player in the financial services industry because we provide a reference point for credit information by lenders. You know, one of the challenges in lending is information asymmetry. So information asymmetry is a situation whereby the lender wishes to obtain as much information as possible about the borrower, but the borrower is willing to give as less information as possible to the lender, so as not to jeopardize his chances of getting credit. So in such a situation, how does the lender get information about this borrower? So that's how we come in. Because we get information on a monthly basis from various credit providers, so we have information about many borrowers in this market. So when you go to Bank A, they will check with us, the bureau, they will check your report, and your report will have the various facilities you have obtained from various lenders. So at least the lender will have a starting point. We have information about you to start with before he probes for more information. So that's how we contribute to the financial services industry. Without information, the learning process would be tiresome and lengthy. But with a credit report, you may not need to go to somebody's home, take pictures, or property, or animals, or what. You have already seen the credit history of this person, and you can make a decision based on what is in front of you. Because a credit report is comprehensive enough to give you comfort as a lender about this borrower in front of you. So once you have that, then we eliminate the costly credit assessment processes that lenders may be going through. So in that way, they save money and time. As a borrower, it's important that you have a credit profile at the bureau. Why? Because a credit report is now your passport. Is now your passport or license to quickly obtain credit from the various credit providers. It's also important to maintain a positive credit profile. It's not enough to have a credit report at the bureau or a credit profile at the bureau, but your profile must be positive. What does that mean? It means that once you have obtained the various credit facilities from wherever you have obtained them, you should be able to be paying in time. You should be able to be paying in the right installments. So that now, your credit score or your credit profile is good. So once you have a good credit profile, then you become a good borrower. Many lenders will be running up to you to provide you credit. And once demand for you is high, then you have the power to negotiate for better credit terms. Yes, because many lenders will be willing to give you credit. So you can set your own terms and negotiate. That's how important it is to have a positive credit profile at the bureau. So I believe that very soon we shall start as bureaus to collect credit information from many other credit providers apart from only those regulated by Bank of Uganda. Yes, these credit providers are categorized into different tiers or groups. Those regulated by Bank of Uganda are in Tier 1, Tier 2, and Tier 3. So Tier 1 are called commercial banks, mainstream commercial banks. Tier 2 are called credit institutions. And Tier 3, microfinance deposit-taking institutions. So those three tiers are regulated by Bank of Uganda. Then we have providers, credit providers, which are in Tier 4. These are SACCOs, non-deposit-taking microfinance institutions, and money lenders. So these ones are regulated by Uganda Microfinance Regulatory Authority. Those are in Tier 4. So previously, those ones were not allowed to share data with the credit reference bureaus. And yet, they serve thousands of borrowers daily. So meaning, as bureaus, we have been collecting less data compared to what is available on the market. But we believe now that we are going to collect all this information, and this will boost our databases as bureaus and also provide a 360-degree view to the lenders about these borrowers in the market. As bureaus, we are important players because as holders of information, credit information, we support lenders, or we are a reference point to all lenders when it comes to making a credit decision. And because we have that information, borrowers, once they know that their credit information is shared, or their credit data is shared with the bureaus, they will also behave and pay their obligations because they don't want to have poor credit profiles at the bureau. So I think with the opening up of the credit information sharing space, the bureaus are set because we have been pushing for that for a long time. And now that the central bank has listened and opened up the space, we are set as bureaus to collect as much information as possible to beef up our databases and also make our reports more valuable to the lenders. Once we are supported in terms of awareness, so that people now know the value of maintaining a positive credit profile at the bureau. So we want borrowers to appreciate the value of their credit reports, always check them regularly to ensure that what the banks report about them is correct. Currently, we are coming up with a solution targeted at the borrowers. We call it Crystal Ball, where individual borrowers will be able to check their credit reports wherever and whenever they are.
Now, when you look at the budget that was read last week, you'll see that agriculture is featuring quite prominently as one of those sectors that is being counted on to help Uganda achieve some of its development objectives. Now, today we explore one of those ingredients, the system that is needed for this to happen. Ugandan farmers today have a chance to access credit using their produce as collateral as government firms up efforts of encouraging financial institutions to accept farmers' produce stored in licensed warehouses as security. The effort is being promoted through the warehouse receipt system, where farmers are encouraged to deposit their produce, especially grain, in gazetted warehouses where they are issued with receipts that they can use as collateral in financial institutions or look for markets, as opposed to moving around with actual produce. This effort is being supported by global partners, including the International Finance Corporation.
Many farmers struggle to access bank loans because they don't have traditional bank collateral, like land, real estate, fixed assets, whereas many farmers, of course, have a surplus of commodity that they can store and then take finance. So this sort of institution, the warehouse receipt system, is very important for the smallholder farmer. Not only can they access the finance, but also because of the caliber of the service provider here on site. They can access formal markets, sell their commodity at a quality premium, reflecting the cleaning, the drying, the fumigation of the commodity, and the storage in standardized 50 kg bags. This will help to access the formal buyers who are willing to reward production of quality maize, and of course deal with many challenges relating to aflatoxins and quality inconsistency that often affects the production here in Uganda and around Africa.
Government through the warehouse system is working with private warehouse operators who have established operations in major grain producing hubs in the country to support the farmers, especially those working in groups such as cooperatives. The other component under the system is the provision of market information to farmers.
There is a whole information system that has been developed that is going to be introduced here soon, and then whoever brings his maize or barley or sorghum, whatever it is, they can read what is happening in the market and then be able to make an informed decision in case you want to buy from them. We pledge to keep working with other stakeholders. The financial institution is not going to be only Centenary Bank. We have engagements with Equity Bank, thanks to IFC.
Uganda has been grappling with quality issues over its grain produce, with the latest event being the barring of its produce into the South Sudanese market over quality. The system is expected to help bridge the quality lapses that exist between the farm, storage, and the market, or what is generally termed as post-harvest handling, so that the farmer is able to get the right dividends from the produce.
But farmers appreciate it. All they want is a place where they can go. The assessment of their commodities done transparently. Grade 1 is grade 1 today, tomorrow, and the day he offtakes or someone offtakes, and he can go to a bank identified and ascertained, and he discounts his receipt. To them, it is as simple as that, and indeed, we should develop the systems that they need to keep it as simple as that for them to quickly appreciate it and adopt it.
Given the huge level of investment needed to take the infrastructure to the grassroots, government has decided to work with private warehouse operators such as this agro-waste facility in Jinja to extend the storage and quality assurance services to the grassroots.
Those services generally help the farmers in that they get, number one, they get a better market. Number two, we also give them in-house training in agronomy practices and post-harvest handling methods. One of the major support is that we try to teach them how to do better production in terms of quantity and quality, because that's the key thing anyway, so that they maximize their profits by doing their business or farming as a business.
Besides coffee, which raked in over $800 million last year, grains such as maize are increasingly becoming major cash crops for Uganda, supported by good weather and soils on the production side, and the expanding demand for food across the region on the market side.